All right, at touch and lows for the Dow here. We're still waiting, by the way, on Rivian, the electric vehicle maker backed by the likes of Amazon and Ford. This one has been a fascinating story to follow because it was originally going to be, priced in the 72 to 74 bucks a share level. That was essentially doubled from the early talk, and then now they're saying, when it does debut, maybe $114, $115 a share. So this thing's like a rocket here. We'll be watching it closely, but again, still waiting for that debut. A good opportunity to talk to Scott Martin, back with us right now, Kingsview Asset Management. Scott, the right IPO at the right time can tell a lot about what clicks with investors. Too early to say whether that, this electric vehicle maker will be that, but it does seem to get the advanced positive buzz. How do guys like you decide where attention is warranted and where maybe standing back is just as well?
Yeah, I think you got to look at the space first and foremost, Neil, as far as where some of these companies are located. You mentioned that this happens to be in the electric vehicle space, which is very hot. Obviously, the price is being chased up as we speak. So that's an area where I think you got to start with respect to where the company is operating. And then secondarily, look at the pricing. As you mentioned, it's already called up another 30 points above the initial IPO price. Usually don't chase things like that, but companies that actually come in, say, around the appropriate IPO valuation, those are companies that we like to buy into because usually the chasing starts happening after they start publicly trading.
A lot of people get into IPOs of all sorts here, and that does seem, like you just stated, to be a fairly reliable rule of thumb, that the faster you come out the gate, sometimes the more problematic longer term. Conversely, sometimes when you stumble coming out the gate, the former Facebook comes to mind. It took, almost a year before things stabilized, and then it was off to the races, all these controversies notwithstanding. Do you play these at all, or do you just hold off until the dust settles?
We do play them. You mentioned Facebook. What a great buying opportunity that was. Fell by about 50%, and then those who were lucky enough to scoop it in the high 20s did very well. Bumble's a recent one that did that as well, Neil, and then, of course, Airbnb as well, and DoorDash, too. So we do play in that space, but as you mentioned, some of these things come hot right out of the gate, and they're just not good stocks to chase. But as long as they come back with some relative valuation, as you mentioned with the latest IPO that we talked about just a second ago, they're losing money hand over fist every quarter. So we don't chase ones that aren't as fundamentally strong, but there are companies out there coming public that are attractive.
Back to Tesla for a second. We were talking electric vehicle players, but the stock lost about $200 billion in market value over the last couple of days. Now it's up about, it looks like about 40 bucks or so, so around 1,064 a share. But what's interesting is it all started with Elon Musk, putting out to Twitter this, poll to say, do you think I should sell some stock up to 21 billion? He lost more than 50 billion on paper in the interim. But it does remind you how dependent that stock is, joined at the hip to its owner.
Yeah, he's a rock star, and so what he does affects all aspects of the company and certainly the stock price. It's kind of funny how he did take the poll or the opinion of Twitter. It ended up costing him more than he actually sold. But the reality is that stock's volatile, and it's at some near all-time highs, and therefore it's going to move around quite a bit. But that space, the electric vehicle space, is so hot that company is going to do very well, especially with a lot of the cars that they have coming down the line.
Thank you, my friend. Scott Martin, following all of these developments. We are following the progress.